Devina Mehra, founder, chairperson and managing director at First Global, is our market master of the day. She's with us. Devina, good morning. Good to have you with us here. It's always a pleasure. Prashant this side. What's worrying the market at the margin, Devina? I was joking with Mitesh about that. He was talking about the 2/3 probability. But of course, that was in the context of the Nifty. But just wanted your thoughts to begin this conversation with, Devina.
Good morning, Prashant, and good morning to the viewers as well. We were expecting some volatility in the short term. So if you see my last interview also, that's what I had said, that while we remain positive in the medium term, at that time I'd said in the 2.5 month kind of horizon, we thought there was going to be volatility. So we have been hedged. We were hedged in March. Those hedges expired. We put on the hedges again in April. So on our PMS portfolios, we have been hedged because our system signaled a possible volatility. So we are not really surprised that this sort of thing is happening, and we are positioned for that. But on the other hand, as I said, since we were not negative on a medium-term basis, we have not made any cash calls. We have not gone into cash.
Okay, you've not gone into cash and you haven't taken any cash calls. Interesting. But Devina, which way do you think the market would swing if the incumbent government doesn't come back into power with a major majority? Because that's what the fear is in this market now. Do you think it will have a big impact on the market post-elections?
Even if that happens, I think the impact will be temporary because if you go back for exactly 20 years, 2004, I think was the biggest upset in election history, where the incumbent government was so confident that they actually advanced the elections by 6 months because they were sure they were going to win. And they lost so badly that I think something like 80% of the cabinet ministers lost their seats. And that day, of course, the market crashed. If I'm not mistaken, the index itself reached the circuit and the trading was halted for some time. But the market forgot it in a couple of weeks' time, and that 1 year basis, that was one amongst the best years in market history. So I think we focus too much on election results. The markets have a mind of their own. India has a momentum of its own.
Hi, Devina. Good morning and good to see you. Where people tell me, Nigel, you've not seen 2004. At least the downside, I hope I don't see that kind of, lower circuit and that kind of thing. So, let's look ahead then. Devina, the last time you joined us, you said few sectors that are quite positive on. If I remember correctly, industrials, pharma and auto. Currently, are you still overweight on that space? So will you be looking to buy out there, or have you turned things around?
No, that we just did our quarterly rebalance in April. So things have not changed from there. Industrials and capital goods, just to remind you, we've been overweight since October 2021, whereas most people started talking about it only last year, only in 2023. So over time, we have cut exposure. We have changed the stocks because many of them even doubled and tripled. So we're not as overweight as we used to be, but we are still overweight. But the question, of course, we ask now every quarter is that, is the story over? Till now, our systems have not signaled that the story is over. So we still remain overweight. And you're right, pharma, autos, some construction, those are the other things we have been overweight on. Where we added more recently have been some commodities, metals and cement. Though, we're not overweight there, but earlier we had very little there, so we've added some there. Most latest addition has been a bank where we still, banking as a whole, we still remain underweight, but after a bad phase, it's not looking quite so bad anymore. So some of the stocks are beginning to look a little better than they used to. So that would be broadly where we are.
No, got that. Devina, and this is something that my colleague Nimesh is going to talk about a little later on Editors Roundtable in the afternoon, in the evening actually. The fact that we're seeing a lot of coverage starting to come through on sectors which are India manufacturing, defense, for example, right, is one area. But a lot of coverage is now coming after stocks have moved up 8, 10, 15 times, 20 times in some cases, right? So there is that feeling of FOMO. Maybe it was not liquid enough. There are institutional constraints. But now, of course, investors are asking them, why don't you have coverage? Tell us more about this. We want to know. And maybe it'll be followed by buying. But just what's your sense? And this is true not just for defense, but capital goods, industrials, a lot of areas. The coverage universe for a lot of people is widening. How do you look at this?
I don't pay much attention to what brokerage coverage says, because many of those things have agendas. I mean, I was on that side of the table at one point.
Would you look at that as a bit of a... Would you look at that as a contra indicator, or is that going too far? Because as I said, they're all coming after stocks have run up 10, 20 times.
Yes, exactly. That's the point. See, as I told you, capital goods, industrial machinery, we went overweight in October 2021. For most human beings, whether fund managers or brokerages, there was that overhang that this is a terrible sector, because it was a dog sector from 2009 to 2021, so 12 long years. But because humans carry that story and bias forward, that for a long time, even when things changed for the sector, people still thought it's not a sector worth looking at. And whereas we went overweight, and as I said, most people have jumped in very late, and we evaluate every quarter whether that story is over. As of now, our systems have not signaled, but as I said, we have cut back, but we are still overweight. Just as, I mean, we are now watching IT, that sometime this year, I think that will bottom out, and that will give a good buying opportunity. No, we are not overweight currently, but so you always have to do things which data shows. So that's why we follow this human plus machine system, so that human biases don't come into the picture. We look at things on a bias-free basis. In 2021 beginning, for example, I think almost the first FMCG stock our systems liked was ITC, which was among our top 5 performers for the next 2 years. But many people discovered it when a lot of the move had already gone.
This human plus machine thing is something all of us need to get used to, right? At least in across most professions. But Devina, I wanted your thoughts on the auto space, not particularly auto, but this whole premiumization theme, right? Because any segment you pick, whether it's travel, you see Interglobe Aviation at a fresh high, whether it's hotels, you see Indian hotels at a fresh high. In the premium auto segment, you see M&M at a fresh high. In the premium FMCG segment, you know, you see some of these, say, platform aggregators like Zomato at fresh highs. So this whole premiumization theme is something that's working quite a bit. You think there's more to go on the upside here? And if yes, what are the stocks that you'd like in this space?
You have to go stock by stock and business by business. But if you look at the economy as a whole, clearly that is very much how the economy has panned out. We all saw that in equity report, which showed that now 65% of the wealth of the country is in the top 10%. It used to be 40% not very long ago. I was reading this Rama Bijapurkar's book, Lilliput Land, and one of the things which struck me is that for the lowest 60%, and particularly the lowest 20% of the population, incomes have actually come down. From 2016 onward, the trajectory has been down. If you look at the lowest 60% in terms of income, now they make no surplus. So just income minus routine expenditure, not even taking one-time expenditure into account, that number is negative. So they're generating no surplus at all. So that's what is playing out. You will see that in sector after sector, that the entry-level stuff is not doing well, and whereas the high-end is selling, there might even be a waiting list and things like premium SUVs or cars. But 80 crore Indians need free ration. So that tells you how the bulk of the population is doing.
Absolutely. Devina, good to speak with you. Thank you very much for your time. It's a pleasure. And, hope we can have a couple more of these interactions running into the election. And, of course, we'd love to have your reaction on that important day as well. Thank you for joining us.
Thank you.